Hello, this is the Chart Profit video, Friday 28th of October, shortly after the open. This from the pre-open today. Monday printed a narrow value area this week above the important level at 2142.25, which is our half range off the August high, this level here in blue. It was higher but narrower, it was low volume, and as I said, that's not normally a short-term positive, and that's why I wanted to see if Tuesday could hold above that level before I made any assumptions about strength, even minor. Tuesday's session printed back below that level. It looked like rejection, another rejected probe of that resistance, and that set up a couple of days lower through Thursday. Thursday was interesting because it opened very close to that level. The high of the session was exactly at that point, and then we sold off for the rest of the session. The value area was actually an inside value area overlapping, but we closed really weak down here. As we opened today, our first level resistance was 21.33. We opened below that level, so that was resistance. Currently printing 21.29 on this half-hour chart. This is a pretty weak pattern, this rejection here of the halfway, and this resistance is yet to be tested, 21.33. So from my way of looking at things, the E-mini is currently in a weak position here. We look at the current daily chart here. Here's the two levels, 2033 resistance and 2142.25 half range, and the major support quite a bit lower at 2087 here. And as I've said, pre-open for a few days, I want to see price back up here above that half range before considering the long side. This is pretty weak price location here. You can see on the spider chart here the equivalent levels, half range off the August high. There's been resistance on Monday, so that's the level we need to get above. There's a 10-month point of control a little higher at 216.33, and the major is down here, the major support 209.90. Price below this level would indicate real weakness and suggest that we're in a serious bear move. Been following the Russell 2000 ETF as a key chart in the pre-open each day, and we're looking at price relative to this 10-month here, 120.82. There was a slight migration in here. Previously the support had been more clearly on the lows until we got to this point, and then the 10 months migrated there. That's the level to watch. We are lower than that. We're in a really weak price location. Major support 115.35. The more time that's printed below this level, even if we see a rally back towards it, the more time below that level, the more the odds favour a test of this level at some point down here. Q's the other key chart that we're following. The support at 117.25 is the 1 year point of control here, and we've just probed that, I think, just briefly today, but we're holding price under here. Would suggest weakness for this chart and kind of confirm the weakness we're seeing in the other charts. This is the FTSE 100, UK FTSE 100 chart. There is 6 month support lower here at 68.54, about 100 points lower. And the bigger support, 68.23, is the 7 year here. You'd expect support somewhere in that band. FTSE holding up relatively well. This is the German DAX chart. Earlier in the week there was another test of that 3 year value area high. All these levels are current. Point of control remains down here at 97.50, so the value area high remains at 10.824. Chart still having a problem with that value area high. Support on this chart is a major half range, and that is 10.545. If there is going to be general global weakness, we'd see the FTSE chart, the DAX chart, the Qs breaking down below these levels, probably at the same time. Let's hope they hold. Another chart that suggests maybe they won't is the NASDAQ index. 52.39 is the 1 year point of control. We're printing below that at the moment. Another negative really is the short-term technicals. I'll look at the pulse chart. The breadth for the pulse chart comes from this chart, and these two indicators at the bottom have moved into weak positions. Net new high is 25. 5-day moving average in black here below zero, and the percentage of stocks greater than their 50-day moving average in my New York list is less than 50. That gives us this red color on this middle bar, which represents New York daily breadth. And also in the bottom we have price momentum, which is currently negative red below zero, just turning down here. So this is pretty bearish looking in the short term pulse chart here. Haven't actually marked any red at the top here, but if we see significant selling in red on the bars at the top here, with the bottom area here coloured red, it's usually pretty negative. Currently the spider sitting in this range, which actually just sits above this major time support here at 209.90. So that is actually the only positive, and it is a positive, the only positive thing I can find on the chart. If this stays red down here and we see price down here with red on the bars, it would look pretty negative. I'll take you quite quickly through the sentiment. We know the RIDEX ratio that I follow, my version of the RIDEX assets ratio, hit a 7-month high towards the end of August up here. Haven't really seen any major deterioration in this number here. I mean, if we saw a swift decline like this, we could look at it from a contrarian sort of positive angle, but I'm not seeing that at the moment. It's kind of interesting because there is a chart I'm going to show you in a second which certainly does look overdone to the downside. I'll just quickly show you these. The public poll from AAII, actually the bulls percent was slightly higher, 24.8, just slightly, bears percent slightly lower. We're looking at this level here, which is the 4-week moving average of the net, bulls minus bears. I haven't actually touched that yet, that might trigger something. Not really telling us too much at the moment, this chart. Or the investors' intelligence, again bulls percent slightly higher, bears percent this week slightly lower. 4-week moving average of the net, bulls minus bears, that's the black line. 1 week ago that was at 22.02, that was a 15-week low. Again, nothing massively significant on this chart. This one, however, is the most interesting chart in the sentiment this week. This is LIPA US fund flows, and this week through 26th, they've reported equity fund, including ETF, outflows of 16.6 billion. That's a single week outflow of 16.6 billion. That's quite a huge number, and that's the largest single weekly outflow since the 28th of August 2015, so over a year ago. And the 4-week flow, that is now a negative 32.5 billion. So there's been $32.5 billion as a net outflow over the last 4 weeks, and that's an extremely low number, and that's down here, and that really is sentiment extreme, more akin to the sort of number you'd see at market lows like these here, but this one's actually lower. Seems at odds with the sentiment I'm seeing elsewhere, like the RIDEX and the public poll, that sort of thing, but this is the data that LIPA are giving us this week. I did suggest a few weeks back that if you just based your market forecast on the sentiment indicators, and we had quite a low reading back here, it was that there would probably be a sell-off down to a low and a quick rebound, but this is actually emphasizing that. Okay, through the supporting charts, this is the T-bond ETF TLT. These are the levels we've had marked on the charts for weeks and weeks. We know the rejection here, we've spoken about this, the 4-month, and then the really swift decline, little rally back, and then we've reached the 3-year support here. So this is a strong area of support for T-bonds, 130.77, and really want to see bonds coming back from here. Price printing time below this level would suggest further weakness and probably indicate that this was indeed a major top for bonds. Oil ETF, USO, oil's been off this week, generally lower over the last couple of weeks, but as long as it holds 1078, or indeed unless that major point of control migrates higher possibly. Currently it's still here, and as long as oil is printing above that level, it's in a strong price location. Been no change in the levels for gold, the major point of control. Well, that moved, didn't it, recently down here, migrated slightly up from 118 something to 119.84, and we are currently printing above that. It's a strong price location. Price printing time back down here would indicate lower, but we're currently holding it. So although there's been this sell-off, well, we did test up here, probed above that 3-year value area high. There's been a decline to this major support, and both gold, GLD, and oil, USO, currently in strong price locations. Dollar index is obviously overbought, had a very strong rally since it crossed above this halfway point here, which was previously resistance here and here, and then we've seen a pretty swift rally. It's just off a little today, but holding these levels, the highest since earlier in the year. This is the Aussie dollar. Spoke at length about this last week. I said that off this major low here, we've seen time spent oscillating here. The major point of control at spot 7650 and the 4-year here, spot 7622. It's a really interesting area for time to be printed to me, indicating that possibly the long decline that we saw prior to this, basically this may be suggesting a reversal to the upside, but we needed to see price printed above here. And I did say it may not happen yet, we may be a few weeks down the line, but if we start seeing price above here, the Aussie dollar could get really interesting. Euro FX chart continues to print in a really weak price location below this major half range, which came off the low in 2015 here to the high. So we're below this and we're below the 4-year, and unless that changes, there's a possibility that the points of control can migrate at any time, depending on time itself. Currently this is in a weak price location. And finally the British pound, the Brexit decline on the left and a long range here, and then we saw 129.71 emerge this level here as the 4-month, and when that did, we printed below it, and then immediate weakness. This flash crash down here remains on the chart, so it looks like it's valid, and then we've built a minor, just a 1-month, which we talked about last week at 122.92 in here, and we're currently printing below that as well, so the pound also remains in a weak price location. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.